Welcome to Trader TV, your insight for the professional investor. I'm Hamish MacArthur here at Trade Tech FX with Bart, Joris, and Alex Goraieb. Welcome to the show, gentlemen.
Thank you.
Thank you and good morning.
Where are firms sourcing data from to drive better execution in FX?
The data essentially comes from the market. So ultimately the banks trading will have a view of the world and data, but certainly the venues where they trade is a key source of information. Refinitiv, for example, runs a number of venues, both primary market, the interdealer venues, such as our matching venue, as well as dealer to customer or relationship venues, such as FXall. So we have a very end-to-end good view of the entire ecosystem, and that comes with data, obviously. So that's one example of where firms can source this data. We're talking spot, and the nuances in quality, right? So depending on the end user, what they're going to use the data for, the use case, different data will be relevant. So they'll need to source it appropriately. And I've mentioned spot. Forwards has been a fairly opaque market, and so there's a lot of focus in terms of providing good quality data for market discovery in forwards. Some looking at it analytically, some looking at it through observed rates. We are in a position to provide both. And there's other opaque markets such as the options market and NDFs where there's continued focus to keep on providing the market with a good view, regardless of the use case, whether it's for actually price discovery and trading, or indeed taking that price and passing it on to a customer who may want to trade with you as a counterparty, or indeed other use cases downstream, post-trade use cases such as TCA.
Fantastic.
There is quite a big evolution in the way how data works. So if we think about in the beginning, we started with pure trade data, where we actually said, this is where almost risk transfer data, where give me a price and then for 100 million and I'll give you the price what it actually sits into it. Now we are in a full different world where every kind of data is actually coming towards you. How we take pictures, for example, alternative data, pictures of Walmart parking lots, to see how people are actually really spending, which will drive your figures, which then actually will drive your execution to see, do I hedge now or do I wait? So the whole market of data becomes bigger and bigger. So if there is one word where I would say, where can you source your data? It's a very difficult one to say. You can't find it on one part. What is important to the user itself is, what is the value which brings you the real trade execution improvements, what you're looking for.
Which parts of trading workflow are impacted by this data?
It's the full life cycle of actually a trade. So when you talk about the pure execution, you talk about trade data. When you actually do it after the trade, you sit in post-trade data, which means you actually start to look, how did my execution work? What is my impact on what the market was at that moment when I did that trade data? But then you have actually the whole part of TCA, which is actually benchmarking yourself towards my peers. Who are my peers? How do I get to that data from my peers where they actually work into it? Because in the end, you want to do better than anybody else because it needs to bring you the P&L, what you're looking for. And then you actually go a step further. Based on what your results is, you go back to your initial cycle, which is on your trade data, which comes in. Why do I filter out based on my other data from my execution side? Why do I actually start to filter out on my trade data, the ones which you don't want to have, the ones which you actually really want to have? Then you actually sit on execution levels itself. And I think this is where now the latest evolution sits in. On execution, how trade data will start to actually impact your execution style. This is where the new world of algorithms allows you to actually really pick in, where you say, hold on, my execution started into it, I have impact footprint into the market, to say it like this, and you actually start to temper your execution because you can see that you're actually pushing the market away. This is where you help actually on trade moment itself, the data actually starts to influence in the way how your execution styles works. So it is actually the full life cycle of the trade itself.
Alex, how would you characterize the best success in applying this data?
Ultimately, the success is down to the consumer of the data and what their objectives are. With the buy-side trader, it would be about execution outcomes and improving it. As Bart said, it's a virtuous circle. So from there is, you figure out who is providing you good liquidity and who's not. So you can essentially educate your panel, and that goes round. From a bank perspective, exactly the same. So if they're providing the buy-side with liquidity, it's, have they got their liquidity pool right? If they do, that's a success. Are they price creating right? Are they creating the right price that's right for their client and going to win them the flow? If they do, that's a success. All of these lead to P&L. And ultimately, if they have happy clients, that's a success for the bank and certainly for the clients themselves. So it really depends on the objectives, But ultimately, most roads lead to improving the quality of execution based on the use of data as part of your trade workflow and how you fit within the ecosystem.
Alex, thank you so much for being on the show.
Thank you.
Bart, thank you for your time.
Thank you.
I'm Hamish MacArthur. This has been Trader TV at TradeTech FX.